Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Last video I have completed the problems on AS5. In this video, one problem on AS5 and then two problems on AS7 I'm going to explain. AS5, Accounting Standard 5, is concerned with the profit or loss for the period, prior period items and changes in accounting policies. That is AS5. Then AS7, construction contracts. So this video is very important in examination. Very frequently a problem will be asked on accounting standards. So you should not only be thorough on the provisions of accounting standard but also on the problems. So the problems which I have given in the link, that will be very important for your preparations. So watch the video till the end, don't skip in between. If you have not watched the earlier videos, I suggest you go to the playlist of my channel, select the subject accounting standard, watch all the earlier videos on different accounting standards. So far I have completed 9 accounting standards. From 1 to 9 I have completed. Now, before starting the next problem number 23, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Without these problems, you cannot understand the solutions. So take the screenshot of the answers of these 3 problems. Then I'll explain all the points in detail. Now, see the 23rd problem. This is the last problem on AS5. A limited company created a provision for bad and doubtful debts at 2.5% on debtors. In preparing the financial statements for the year 2003-2004, subsequently, on a review of the credit period allowed and the financial capacity of the customers, the company decided to increase the provision to 8% on debtors as on 31st March 2004. So earlier the company was making a provision for bad and doubtful debts at 2.5%. Now, at the end of the year, the company has decided to increase the percentage from 2.5% to 8% after studying the credit period and also capacity of the customers to make the repayment. So the company has decided to change it. The accounts were not yet approved by the board of directors till the date of decision. When the company decided to increase the provision for doubtful debts, till that time the financial statements are not yet approved by the board of directors. Then, while applying the relevant accounting standard, can this revision be considered as an extraordinary item or prior period item? These are the contents of the problem. See here. In Accounting Standard 5, AS5, it is concerned with the net profit or loss for the period, prior period items or accounting changes in accounting policies. Now the company wants to change the provision for doubtful debts from 2.5% to 8% after studying different situations and before approving by the board of directors. Can it be decided as an extraordinary item or a prior period item? So we must know the meaning. What do you mean by extraordinary item and what do you mean by prior period item? These meanings have been given by AS5. Now we'll see. One thing you remember, when the company changes the percentage of provision for doubtful debts, it is a change in accounting estimate. It is not a change, it is not a prior period item, it is not an extraordinary item. It is neither extraordinary item nor a prior period item. It is only a change in the accounting estimate. No adjustments are required, simply it requires a disclosure in the reports, in the notes. The financial statements need not be changed, right? It is only a change in the accounting estimate. Now, see carefully. The increase in the provision for bad and doubtful debts from 2.5% to 8% can neither be treated as extraordinary item nor it can be treated as a prior period item. As AS5 defines the terms, Accounting Standard 5 has already defined the terms extraordinary item and prior period item. What do you mean by extraordinary item? As income or expense that arise from events or transactions that are clearly distinct from ordinary activities of the enterprise and therefore not expected to recur frequently or regularly. That means this is the item. Extraordinary item is any item of income or expense that arise from events that are completely distinct from ordinary activities. Two types of activities are there: ordinary activities and extraordinary activities. Extraordinary activities are those items or items of incomes or expenses which are clearly distinct from the ordinary activities, and these activities do not recur, do not regularly occur, very frequent, rarely it will occur. Any rare event, rare activity is called extraordinary activity. The routine activity is called ordinary activity. So this is the meaning given by AS5 regarding extraordinary item. Now what are prior period items? Prior period items are the incomes or expenses which arise during the current year on account of error or omissions occurred in the previous year or prior periods, last year or year before last year or past years. So any error or omission occurred in the past years and that event occurring in the current year. That means the effect of that error is occurring in the current year. That is called prior period item. So what is the meaning? Income or expense which arise in the current period as a result of error or omission in the preparation of financial statement of one or more prior periods. So this will give you the meaning of the term extraordinary item and prior period. And this changing the provision for doubtful debts, it is not at all an extraordinary item. It is an ordinary item only. Every business will make a provision for bad and doubtful debts. Every year provision for doubtful debts may be there because there is a possibility that some of the debtors may not pay the amount. So it's an ordinary activity. It is not a prior period item because there was no error in the past in preparing the financial statements. No error at all. So here the present revision is arising clearly from ordinary activities of the enterprise. Also, it is not an account of any error or omission in the preparation of financial statements of prior period. Now, the said increase is a change in financial accounting estimate. Finally, when it is not an extraordinary item, it is not a prior period item, then what it is? It is only a change in the financial accounting estimate. Now, an accounting estimate means determination of an amount. Accounting is not at all completely objective. Some subjective elements will also be there in the accounting. That means the accountant has to apply his personal judgment on some events and correspondingly an amount should be given to that judgment. So this percentage, this provision for doubtful debt percentage is a judgmental item. Management has to decide. Now the determination is normally based on judgments taken on the basis of latest information available. Because every year the information will be different. The situation will be different. It is not compulsory that the business, if it is maintaining 5% provision for doubtful debts, every year 5% only should be applied. No, the business may change it according to the situation. So the items are estimation for bad debts and estimation of useful life of depreciable assets. These are the items where the management has to apply the judgment in order to decide. So it is an accounting estimate. Such estimates may need revision as additional information becomes known. So every year some new information will be there. So according to the new information, it has to revise these accounting estimates. Thus, the increase in the provision for bad and doubtful debts is neither an extraordinary item nor it is a prior period item. Instead, it is a change in the accounting estimate. That's it. The nature and amount of this change should be disclosed appropriately in the financial statements for the year 2003-2004. The effect of this change, the nature of the change and the amount of the change must be suitably disclosed, appropriately disclosed in the financial statements. That's what accounting standard AS5 says. So far, 4 problems I have completed on AS5. Now I am moving on to the next problem, which is on AS7. That AS7 is construction contract. We don't have AS6. That AS6 was there on depreciation and it was already withdrawn by ICI. Now we'll come to AS7 construction contracts. Now see the 24th problem. Messrs. Excellent Construction Company Limited undertook a contract to construct a building for rupees 3 crore on 1st September 2011. Now carefully you see, the company, Excellent Construction Company, they are construction contractors. They undertook a contract to construct a building. The contract price agreed between the contractor and the contractee is 3 crore rupees. The company has agreed to make the building for rupees 3 crore. This agreement was made on 1st September 2011. On 31st March 2012, that means the accounts are closed by company on 31st March 2012. The company found that it had already spent 1 crore 80 lakh on the construction. 1.8 crore, 1 crore 80 lakh rupees expenditure already incurred by the company on the contract. Till date, prudent estimate of additional cost of completion was rupees 1 crore 40 lakh. The company had already incurred 1.8 crore, 1 crore 80 lakh, and prudent estimate of the additional cost to be incurred in future is 1 crore 40 lakh. That means already incurred 1.8, to be incurred 1.4. So 1.8 plus 1.4, you will get 3.2 crore. That means the contract price is only 3 crore. But the expenditure on the contract is coming to 3.2 crore. That means 0.2 crore will be loss. The company is going to incur a loss of 0.2 crore. That means 20 lakh. What amount should be charged to revenue account in the final accounts for the year ended 31st March 2012 as per the provisions of Accounting Standard 7, construction contract? Now it is asking you in the problem, how much loss should be recognized in the financial statements ending 31st March 2012 by applying the provisions of AS7. Now listen carefully. Accounting Standard 7 construction contract says, if we prudently estimate the cost of the contract, and after estimating prudently the total cost of the contract, if a loss arises, complete loss should be charged to profit and loss account. Not proportional charge, but the complete expected loss should be charged to profit and loss account. In the current problem, prudently, carefully, the company has estimated that the total cost will be 3.2 crore, 3 crore 20 lakh, whereas the contract price is only 3 lakh. That means 20 lakh rupees is the foreseeable loss. The accounting standard says complete 20 lakh should be charged to profit and loss account. Now see carefully here. Cost incurred till 31st March 2012. It is given 1 crore 80 lakh. This is the cost incurred. Prudent estimate of additional cost for completion. Up to the completion date, how much cost to be incurred, expected to be incurred in future, 1.4 crore, 1 crore 40 lakh. So 1 crore 80 lakh plus 1 crore 40 lakh, 3 crore 20 lakh is the total cost of the construction. minus contract price is 3 crore. So 320 minus 300, you will get 20 lakh total foreseeable loss. Now what should be done regarding this total foreseeable loss? AS7 says complete 20 lakh rupees should be charged to revenue account, to the profit and loss account. So as per para 35 of the AS7 construction contract, when it is probable that the total contract cost will exceed the contract revenue, the expected loss should be recognized as an expense immediately. That is the provision given by para 35 of AS7 construction contract. If a company probably expects that the construction cost is going to be more than the construction revenue, then whatever loss we are getting, immediately it should be charged to profit and loss account, the whole loss, 20 lakh. Accordingly, the loss of 20 lakh rupees should be recognized as an expense in the year 2011-12. Now, also, as per para 21 of AS7, when the outcome of the construction contract can be estimated reliably, contract revenue and contract cost associated with the construction contract should be recognized as revenue and expense respectively by calculating to the stage, by reference to the stage of completion of the contract activity to the reporting date. So again, para number 21 of the AS7 says when the outcome of the construction contract is known, when the outcome of the construction contract is known, then we have to recognize the revenue and cost depending on the percentage of work completed. Percentage of work completed. So here in our problem, the expenditure already incurred is 1 crore 80 lakh, whereas the total cost of the contract is 3 crore 20 lakh. So what is the percentage of work done? So percentage of work done is 1 crore 80 lakh divided by 3 crore 20 lakh into 100, you will get 56.25. So 56.25 percentage of cost has been incurred. Cost has been incurred. Now how much revenue to be recognized as a turnover? So proportion of total contract value to be recognized at turnover is 56.25% of the contract price. The contract price is 3 crore. So 3 crore into 56.25%, you will get 1 crore 68 lakh 75,000. This should be recognized as the revenue of the year or the turnover of the year. That's it. So this is the end of problem number 24. Now see the 25th problem. A contractor entered into a contract for building roads for rupees 2 crore. So company has entered into a contract to build the road. The contract price is 2 crore. After completing 60% of the contract, he come to know that the cost of completing the contract would be 2.4 crore. That means 2 crore 40 lakh. The cost is expected to come to 2.4 crore, but the contract price is only 2 crore. That means the total loss to be incurred probably is 0.4 crore or 40 lakh. Then the accountant transferred rupees 0.24 crore, that is 60% of total loss of 0.40 crore to profit and loss account in the current year. Comment. Actually total loss is coming to 40 lakh. How? 2.40 minus 2.00, 0.40 crore or 40 lakh. What the accountant has done, because only 60% work is completed, he has transferred 60% of 0.4 crore. So 0.40 into 60%, you will get 0.24. You know, 0.24 crore or 24 lakh. The total loss is 40 lakh. But the accountant is transferring only 24 lakh, saying that 60% of 40 lakh I am transferring to profit and loss account. What accounting standard AS7 says. According to para 35 of AS7, it says that the complete loss should be provided to profit and loss account, not the percentage of work completed. The accountant is wrong. He should not charge 24 lakh to profit and loss account. He should charge the complete 40 lakh as per the accounting standard 7. So here you can see this problem is based on AS7. The standard provides that irrespective of the reliability or otherwise of the outcome of the contract, any expected loss on the contract should be immediately recognized as an expense. This is the main provision of AS7. Irrespective of the completion of the contract, irrespective of the probability of incurring loss, the complete loss should be transferred to revenue account. Now, the amount of such loss is determined irrespective of. This loss is determined irrespective of whether or not the work has been commenced on contract or the stage of completion of the contract to arise on other contracts which are not treated as a single contract. That means irrespective of the percentage of work done, irrespective whether work has started or not, whatever expected loss is there, the total expected loss should be transferred to profit and loss account. In view of the above, the entire amount of capital loss, that is rupees 0.40 crore, 2.40 minus 2.00, 0.40 crore is the loss, then should be recognized as an expense immediately, despite the fact that only 60% of the work has been completed. Ignore 60%. Then therefore the action of the accountant of transferring only rupees 0.24 crore to the profit and loss account is wrong. So ultimately our conclusion, the accountant's act of transferring only 0.24 crore is wrong. He should transfer completely 0.40 crore. He must therefore transfer whole 0.40 crore to profit and loss account as an expense. Auditor must advise. Here auditor, the person who is checking the accounts, he must instruct, he must advise the accountant to change the policy, to charge complete 0.40 crore. If the accountant denies to change, then the auditor must qualify the report. Auditor must qualify the report that they are not following the accounting standard 7. They are not charging the entire loss. That's it. So this is the end of problem number 25. So far, I have completed 25 problems on different accounting standards. Hope you are understanding my lectures, getting a command on the topic of accounting standards. Watch the video till the end. Share my channel among your friends, among your group, so that more students can watch the videos and enhance the knowledge. Give your comments. I'm waiting for your comments, your feedback, so that I can be able to improve my method of lectures. So till now, 25 problems I have completed. Inshallah, we'll continue the next problem in the next video.